Check, 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 check. How we doing? Check, check, check. Yeah, it looks like it's good. All right. Oh, shit. Oh, hey, guys, are we there? Can you guys hear me all right? Oh, shit, how do I say that? Trues. Can you hear me all right? It seems a little low on my end. I was having to use a different setup here. Oh, check, check, check. Come on, come on, come on. It looks like you must be hearing me. Yo. Anybody there? Check, check, check. Maybe a little low. Okay. Thank you, man. Is that a little bit better? I got to get this mic right on my mouth. Audio is fine. Oh, hey, man. LVG. Incognito. All right. Oh, glad to see you're here, LVG. It's kind of a wacky day in the markets. I don't think anybody expected that big turnaround that we had today. Okay, guys, let me get started here. Now, I'm gonna get over here. It's a little bit wacky for me because I'm using a different setup here because I've got a guest joining us. Well, at least that's the goal, is to see if we can make this fly. And joining us at 1, interesting product that I've been, kind of exploring. I like the guy. So he's going to join us at 1, maybe show you a little bit about what his product does. It's very, very reasonably priced and really quite useful. So we'll tap on that around 1. I think, given what we've got here, it should be just about right. Anything we miss or if we run over, I'll circle back and get to them. Okay, so I've got Bitcoin up there right now. I'm first up here with the requests. This is Muhammad asking for gold. Well, this is a really difficult count. So I've got to remember to change because the setup here, I have to do it one tab at a time. I can't just share the window, which I normally do with OBS. So a little tricky here. So I'm going to keep an eye on the chat. So I think you guys can see this. Now, this is an image I just got from PK because I had to call in reinforcements here. This is a really difficult count. So this is a daily count, so you can get a look at where we are. Oh, I don't have it live, but I think you can kind of get the gist of it. So all the way back to 2016 is where we start this impulse. Now this is the midsection here. I'm assuming you guys can see that. This is where it gets very tricky, and then yet again difficult here. This, let's see if I zoom in here. This is probably the most irregular section we've got here. It looks like this is all wick. So at times with Elliott Wave, you've got to go with what's implied. So the wick here is distorting the count. So PK is kind of doing the same thing, as in, okay, we've got a 3, 4, 5, which, as you analyze it here, that would be a truncation. Then we get our 2. Now, truncation is where you go last resort. You can't quite. I was looking at a WXY. Did we have a triangle here? It doesn't quite work to triangle that. So the truncated 5th idea here of a 1, 2, 3, 4, 5 is most in sync with what follows, right? So for the implication being 1, 2, 1, 2, getting a big 3 here. So on this daily count, I mean, this is awfully bullish, right? And I don't think anyone would disagree here. We're in a pretty rip-roaring move here. But if you look at the targets up here, 3,200. I mean, do we have the right look? Yeah, we have the right look. Do we have the subdivision aside from the unusual 1, 2 here? I mean, what you're going to sell it? I mean, that's an 8-year uptrend. Doesn't look like it's done. Just looks like give me a retrace. Right, you got the fifth of the third retrace to come. Oh, let me just check here. Then the retrace for the 4, and then a push for the 5. So you're in the 5th, which is, I mean, I suppose you're a little bit more risk averse here for the potential that, okay, well, maybe we're wrong here, and you're up here, and the thing is done here. But if this is the 1, 2 right here, and we're pushing for 3, 4, 5. I think any retrace here is going to be an opportunity. Now, trading gold, it's to trade the futures. Yeah, I mean, it's a lot of margin, right? And then the overnight margin, and there's a lot of risk here. Something weird happens. So it can be challenging, but the FX, the CFD, these options, unless you're in the US, right, that might be a more palatable way to trade it, or trade it with options. Now you're going to need, of course, right, options. It's a different animal, right? So you're going to fight the time decay if you're trying to get long. But that's what I would suggest for anyone, right? If you can trade it in FX and trade the I think what we have here. Yeah, this is the XAU. I think so. He's got it on FX. I do that so you don't have to take a full futures contract, which is going to make you nervous, right? Because it's volatile. And the overnight risk is going to be concerning, right? So an option, maybe you're buying here, maybe you do a call spread, something like that to reduce the potential risk. But if we get a retrace into the 4 and we're in the sweet spot, that's a trade you want, right? The other thought is maybe you buy the call and maybe selling out of the money put spread, right? A hedged put spread. So you're selling the nearer put, buying the further away put. So you get a credit and use that to offset the cost of the call. And then as you start to rally, you sell another call. So you end up with a call spread here and a put spread, a bullish put spread, vertical, and then a straight vertical here. That can be a nice way to buy some time and offset the time decay that's going to eat into any long option. So just buying a call, that's a low probability event. Right. So always, whenever I'm looking at buying a call, I'm looking for a way to offset the cost. So if we come down for the 4, well, puts are going to be gaining in value, right? So you can sell a little further from the money. I would sell below that 1, right? So if you can sell, maybe the 21, 2000, something like that, see what the credit looks like to buy wherever we are at the money. And then as it starts to rally, right, assuming we start to rally, then selling out of the money call to offset the cost, right? So then you can get fairly close to a low risk entry for the 4th to the 5th. And then I would close up here, then reevaluate here. And then I'd do the same thing on the 4, 5. I don't know if that makes sense, right? I know we don't talk a lot of options, but that's how I would approach it. For any of you that are what do we got? Or just trade the ETF, right? Good point, Robin. You could just trade the ETF, right? If you don't want to trade the futures, and if you don't have access to the CFDs, so trade the ETF. Good thought. Thanks for that, Robin. I'm so used to trading futures, right? I always think futures. Okay, so that's the daily. You might take a look at that. Very challenging count in here, right? This A triangle B up to the C, right? Down for the impulse here. That'd be a good challenge for anyone to bring that up, right? You won't remember it, right? You'll have kind of an idea. See if you can do it yourself, right? Very tricky count, right? I called in reinforcements, which I do often, right? As I tell you, right? All the guys that work for me are better eliticians than I am, right? That's the advantage of the Discord community is you've got resource access to some of the best eliticians you're going to find anywhere, right? And PK, one of the best. So, right. I mean, as I'd do the same thing, right? When I'm stuck, I go to my guys and say, what do you see here? What do you think? Right. Oh shit. Right. The triangle. Oh, that makes perfect sense. Okay, so let me keep moving. We got that one for Muhammad. Okay, so here I've got. Oh, okay. This is never give back. Okay, I don't know if we're going to get a link here or not. So let me see what happens here. I got to watch, see if you guys get the same thing. Oh shit! I should have warned you. White screen. All right, get your shades out. God, what have we got here? GOTU. It's this. No, it is. Gaotu. Shit, I have no idea what this is. What is my symbol here? Bats. GOTU. Chart image by Factory Thoughts. God, I don't know. Never get back. I don't know. Can I get? Let's see. Can I get that chart? Let me see if I do. Do you guys get it? Let me share this tab instead. So I got to switch these. Okay, so now I'm going to go here. It's just a little bit different for me on this end. Okay, so this seems to be what we're looking at here. Let's go out to the daily. What did you give me? You gave, oh no, you gave me a 4 hour. Okay, so let's go back to your 4 hour. Okay, all right, so did you give it to me in log scale? Doesn't look like it. All right, well, 1, 2, pretty drop dead in your lap. That's not too hard to spot. I get right on that. A little sloppy down here. That's a clear close below. Apparently they stayed with it. Or let's see. Let's see if I'm out of log here. Yeah, that's close below. In log, let's take a look. Log. Now, is that the right choice here? What am I at here? 66 cents to $7. Yeah. I mean, it's 4 times the range. You have to look at it in log. 64 cents to $9. You know, that's a range that we want to look at in log. So now, see, you got to be careful about the ideas like, oh, are we just doing that because we broke here? Well, the other thing I can see here, just looking at it, there's a fair value gap down here that perhaps, right, that's a little tap by the algo to rebalance that. It doesn't get too far into it. Doesn't need to. Perhaps. This looks like an A, B. Oh, shit. Shit. How do we count this here? 1 triangle 4 into the 1. Okay, that works. So we end up going 1, 2 over here, 1, 2, 1, 2. So it's a series of 1, 2s. That's good work. That's good work from Never Give Back. Oh, I think sounds like he got it from somebody else. Let's see if I look at this. Well, sometimes we can overcomplicate things. What's the most obvious thing I can see? What I often try and think of things like, okay, if I was trying to teach Elliott Wave to a 7th grader, how would I do it? And then if you gave him just a rudimentary explanation of it in just 5s and 3s, I want it to be that drop dead simple. Right? If it gets more complicated than that, then you got to really ask yourself, okay, do I want to trade this? There has to be a reason. If the count is not, so easy a 7th grader could do it. Something to think about, right? We overcomplicate. Let's see. Okay, 1, 2, 3, 4. Now that doesn't overlap. Looks like it's technical. All right, so 2 to the right to a 50. This right. So obviously they stay with it here. So did you get a second one here? You might have picked them up here. Looks like it might be too deep. Yeah, it is. So we're getting 707 range here. Looks like there's another fair value gap here, but obviously they stayed with it. 1, 2, 3, 4. How are you not bullish, right? So do we have the right kind of setup here? Now we, in terms of what we teach, right? With so much of what we're trying to do here with these live streams, is just kind of give you something to think about. Oh shit! Now what's going on? I think we're all right here. So I've got other guys joining here. A little bit of a technical challenge here today. Okay, so 1, 2, 3, 4. Okay, how's the start there? 1, 2. It's not the impulse you'd hope for. Let's see if we go to a 1, right? Can we dig one out of there? Yeah, it looks like we can. 1, 2, 3, 4, 5. So we can just, oh, come here. 1, working on a 2. It looks like that might be technical as well. Into the fair value gap, little rebalance. Got a big one down here, right, which is going to be a draw, right, for the algos. Do they need to rebalance that? Well, even, I mean, that's a 60. I really don't like to go below those, right, for Elliott Wave. 1, 2, 3, 4, 5. A, B, C. Shit, maybe we have to go to 15 just to get the count out here. A, B, C. Well, that would not be good enough for me. It's for me, right? It's not that I'm, have all the answers. It's just I know what I'm looking for. So if I pull that off, what I want to see, and I go over this a lot in these live streams here, I want to see something push up here to give me some indication that this downtrend is ending, right? So this would be, where could I objectively say, okay, we've got a change, lower low, lower double top, lower low, lower high, lower low, fair value gap. This is, I think, one of the bigger mistakes that people make. They try and pick the turn. And you just never need to. In fact, that's probably this has taken me years to fight that instinct, because if I see that's a golden zone, I want to buy it. But you're so much better, because this can so easily roll over. It's not the first one you want. It's the second one. It's always, right? It's always the retrace, because that's all the market ever does. That's it. That's all it's capable of doing. We're two-dimensional here. That's all it can do. And this is what the algos key off right there. That's it. Well, that's your measured move algo. Right? I mean, so it's always just a series of this, just being connected, right? So if we get, is it corrective? Oh, I don't know. What, or is it just this, right? So you end up with, this is just the add-on to the first one, right? Then we get another one, right? So this one, we get the 5. But then you're anticipating the 3. So when you're looking here, what do we have here? We have the A, the B, and the C, right? Or the 1, 2, 3, or however you want to look at it, right? That's what the algo is responding to. So when I see that, okay, well, what am I looking for? I'm looking for now the counter to come this way. If it turns into a 3, 4, 5, well, that's just gravy. But this here is, right, this is the move you're after. It's the second one, not the first one. That's probably the biggest mistake over and over and over I see people make, right? And they just say, well, what were you doing down here? Now you can go down to the 5-minute and you could say, okay, well, I was trying to, dig out down into this. So do I have the conditions there? Do I have a change? Right now here, you're really digging here. Is this enough? No, because this is internal, right? So, well, we're going to have to go a ways here. This is what it has to get to really change the whole character of it. We're down on a 5-minute. Internal, right? This is just tapping the fair value gap. That's where it has to get to, where you can say, oh, change. Otherwise, lower low, lower high. This is just a retrace. Let's go back to something larger here. So to your, who gave me this, never give back. It's not ripe yet. Now, of course, when I say that, I'm not saying that this couldn't just launch from here. It's never what I'm saying. It's just in terms of risk management and trying to get your best entry and not being overly aggressive, as in, oh, there's the turn. Right. I mean, so so first thing you're doing is you're making the assumption that we're going to blow right through. We're going to fill this fair value gap and we're just going to go right through it. Maybe. Just something to think about. 1, 2, 3, 4, 5. That's not enough, in my view. Right? Again, I could be completely wrong, but based on what we teach, and this is it's not ripe yet. Getting there. That's what I would rather see. And then if I get that, then this has to break, right? We just looked at that. You'd be well, look at it this way. If this holds here, and looks like it will, Well, now I've got a big fair value gap here, right? This bar hasn't closed yet, which is why the software is not putting it on there. Okay, am I going to just be so sure about where this is going that I'm going to assume it's just going to blow right through that fair value gap? I mean, I'm not telling you not to take that trade or not do that. I'm just saying that's a lower risk way to do it. Let it do that. And then even here, again, you're waiting. Okay. It's got to go up. We got to break this, right? So if this is ABC, I got to break the B. Break the B now. Okay. Can I get this? Now stops below. Right now I can start to go. Because again, what did I get? I got this. That's all the market can do ever. That's all it can ever do. Just variations of that. Do I have it? No. Will I have it? Right. All right. So that's an interesting one. I never even looked at that. Never give back. Never even heard of it. Gaotu Techedu. Is that what it is? Edu. Interesting one. One for the watch list. Know anything about it. Okay, let me keep going because I'm on a schedule here. Okay, so this is now I got Elon Jr. Yeah, it's forever. I see Elton John. Elon Jr. He wants a look at oh shit, how am I going to do this here? RUNE. Okay, so let's go RUNE. USD. What do we got here? Let's go USD. I know maybe he probably wants it on Binance here, but because the majority of our members and viewers are US based, I'm going to go with something that could be traded in the US, may not have as much history. Okay, so let's go back to a daily. Okay, we got what, again, 4 times the range, right? That's pretty much the requirement. Okay, so we got to be in log scale. Well, that 4, 3, 4. So what's it implying? Let's take a look. So this would have to be A, B, C, D, E. This have to be a triangle. Fuck, can we get that? Hang on a second. Well, this is the true low here. So 1, 2, 3, 4, 5, A, B. Let's break that up a little bit. Let's go see if the 8 helps a little bit. Oops. We got this kind of wacky wick. That's a bit small for the. Doesn't look like I can get an impulse here because of that wick, although I will go over to a line chart. Okay, better. Because there's a wick in there that's, these wicks are kind of fucking it up. Yeah, it's crypto, right? We get liquidation wick. Well, let's see if we can take it traditionally, right? So this would be invalidation for a 1-2. I have to put that here. I think you're just going to go again. It's what's the implication? That's what's implied, right? With just the swing structure. Now, is that perfect, Elliott? No. Does it matter at this point? Does it matter? Right look? Yep. Right look, right? So I do that, right, very, very deliberately for that reason, right? I'm looking at it myself going, okay, do I have the right look? I mean, Elliott made a big deal of that. Does it have the right look? 2 is a little shallow, but it makes sense, right? You can kind of look here and go, all right, well, we got kind of a box that we're in, right? This being the little teaser, right? Trying to suck in. Who's that? Right? Retail gets bent over. Up we go. Okay, so let's just see if we can apply it traditionally, right? Just traditional retracements. If that's a 4, let's get a wave 4 on there, right? Just so you know, these are just the most common locations for a wave 4. Okay, so up for the 5, all right? So the geometry, unless you're going to put the 1 here and make this some sort of a, which this would be a complex B, but that you might have a flat there. It's still, you've got the 2, right? So then I would just double check it, right? So just see how we look here, right? There's the high probability zone for a 3. If this is the 1, is it any better? Not really. I think I prefer this, right? With this consolidation here, and then the launch point here. So this is cause, so that's the effect. 4, well, that's pretty gnarly. We don't get a great finish there, do we? Let's go to a 4. Oh, this had it's true double there. Interesting. All right, so this wicks it. So you've got to, you end up with a 2 here. Boy, that's 3. Oof. Well, you're stuck with it, right? It's just okay, right? Again, Elliott's not perfect. Can you dig it out of there? 1, 2, 3, 4. Yeah, you can. Is that what anybody would hope? No. You'd hope to spot here, but it's basically just vertical. And then the correction is pretty clean. So again, does any of this matter, right? Well, let's get to the hard right edge, right? Well, I got a completed impulse here, right? So I got an ABC. Well, if we're done here, right, of course, we're looking for a 50. So let's tee this up from the low, and we'll put our just a golden zone on there. Okay. How's the geometry? A little wacky, so you'd have to double it. Well, shit, you're all right there. 1, 2, 3, 4, 5. Right, break. That's a pretty good looking pivot there. Now it's not as deep as you might like. All right, so let's take out a log. Right, interesting. But we need to be in log, right? So this is just the kind of pivot you might look for. So what do we do here? We can see that the lows are swept here, right? So what happens here? This is all just stops being grabbed, right? So for the algo, that's a little liquidity dip. Who else is getting bent over here? Breakout traders. So you've got all the ingredients here. So let's see if I draw it this way. So the last move down, so we're sweeping here additionally, right? There's the sweep here. So sweep the low, right? Grab the liquidity, right? So you got a double dip here for liquidity. Then now we've broken here. And so we break here. So that gives us a chain, right? Lower low, lower high, lower low, lower up. Change. You want to keep it simple. Right? It's change of character. Something changed. That's just the kind. Now, what's the next play? I'm assuming you guys all know the next play there. Now, lots of resistance to get through because the algo just has to dip in here to rebalance it. Big wick, right? So we don't have any fair. Yeah, we do actually. Little fair value gap right there. So if we come back down here, heads up. You've got all the ingredients there, right? So we've swept the lows down here. We've had a change of character up here, right? So now what are we looking for? I'm gonna get that off my mouse. The thing is annoying how it sticks, right? There it is. That's all the market can do, ever. It can go sideways, but everything is always some subdivision of that. A, B, give me a C. And if I get down here, what am I looking for? A. Right? Does it turn into a 3, 4, 5? Oh, that's just gravy. Oh, I thought I could do it. Three. Does it turn into a 5? Just a series of 3s being connected, right? That's all, again, it's all the market ever does, right? Here's a 3, here's a 3, here's a 3. Series of 3s. That's right in the pocket, right? Good one. Now it's a little shallow on the lows, but I would take that trade any day. right there. If you don't want to try and get the turn, you take the first retrace, right? Then you get a very low risk trade. If it gets stopped out, okay, well now we reconsider it a little bit lower. Right? That can happen right to the pivot. But ideally, you get the golden zone because then you got an algo, chopping the forest down ahead of you, clearing the path. Okay, let me keep going there. That's a good one, Elon Jr. RUNE is one I think everybody needs to be kind of watching that one. God Lysop. Okay, interesting. I'm new to Elliott Wave. Let's see what you got. See if I can do it right here. Make sure this stays on track here so you guys get the same thing. Does that work? I think it does. Okay, good. So let me copy that one. Save, and now I have to go over here, share this tab instead. That I usually don't have to do. Okay, so what are we doing here? AGI USDT. Well, for someone who's new to Elliott Wave, that's a pretty good start. Okay, so as we've been talking today, what do I have here? Just a big 3. 3 that turned into a 5. 2. All right, it's very nice work. So what are we going here? So we're going from a penny and change to 67 cents. So all very good. Man, again, for someone who's new to Elliott Wave, this is awfully good work. So 1, 2, clear impulse, nice little channeling there. A, B, 1, 2, 3, 4. That's kind of cryptos all like that. Is that 1, 2? Let's get in there. It looks like you might have it. Oh, you've already labeled it. Oh, good. Oh, geez. And you're good with the labeling too. A, B, 1, 2, 3, 4, waterfall. Right to a 50. So where are you pulling from? You're pulling from, let's see how you did this. All right. So it looks like you're pulling from, here, let's do a wave 4. Right. So you're pulling from the right location. Right. So that's good. I just do it that way so that people can see it. Boom. Oh, probably right. If you looked at a volume profile, if I do it this way. Remember the first one. You're going to have a little high volume node there, right? So a nice volume node. Here's your POC. Little volume cluster here, right? Ties to that, right? So good location, likely an order block there. If we zoom in there, yeah, so here the order block would be. Yeah, it's a little. So here's the whole thing right there. So why am I picking that? Because where's the fair value gap? It's right after that, right? So a good order block has to create a fair value gap, or it's just a gap, right? Not one we're interested in. So here would be the order block. Here's the fair value gap, right? So we know, right, it's muscle that caused it. Through A, B, C. Geez, that's good work as well. Oh, you locked it. Okay. Up for the 5. You're just kind of stuck with it. But the implication is that we've got a 5 down, sideways for the B. That's great work. 1, 2, 1, 2. Well, what else? What you're kind of stuck with that. 1, 2. I don't know that it would matter. The alternate would be 1, 2's over here, but then we get an impulse coming off of that. That actually looks like that could work, because this is kind of a tiny little 1, or pardon me, a 3. So 4 in here going for the 5 for that 3. Well, right. So just again, same thing you would do every time. Okay. So what's a reasonable target for the 3rd? Well, unless we're going to get a big kicker for the 5th here, right, to get up to a 1618. I mean, here, at least we're getting, I want to get over that 100. It's almost the same distance here for the internal one. By doing this, right, at least we've cleared here. So the alternate count here. The only issue with that is that this is so short. For God lights up. Okay, I mean, it's a guesstimate here because we can't say for sure, right? I mean, possibly that's your. If I were to change that, I would just do it that way. So I'm just giving a little more time. Then this potentially is one of three. Not that your count is not right. I'm just giving you an alternate. So this would become of the internal, right? Once you get started, now I need another one if I'm going to get a 3. Right, so that would go down a degree. Maybe that's all much higher. 1, 2. So that would be the only variation. And again, that's I'm not saying the first one's not correct. It's just an alternate to consider. 1, 2, 1, 2, 3, 4, 5. That's very, very good work for someone new to Elliott Wave. Well, you can't be that new. You've been studying a little bit. Very nicely done. Right. So that definitely won. It's on Bybit. I don't know how I ended up on. Oh, that's because you sent it on Bybit. Okay. Right. So looks good. Do we have all the conditions we like? Oops. Swept the lows. Bent breakout traders over, right? Is the position they apparently love. Okay, right. So there's the sweep. Let's get in there. Break the structure. Little change of character. Now we're holding above. Coming back for the 2. Pretty good. What's next? Coming down here. Little unmitigated order flow right here. Right, that's on that little down bar. This little downswing has not been tapped into at all. So if we come a little bit lower, yeah, interested. Don't want to take the. You know, I'm assuming it's not that this couldn't happen, right? But more likely you're going to get that. That's where you enter. Remember, that's all the market can do. Okay, good work. God lice up. Oh, and please look at ALU. You mean what the shit? ALU? I don't know what ALU is. You mean aluminum? What do you mean? ALU. Oh shit, man. I don't know what you mean. ALU. You must be talking about a crypto. Oh, USD. ALUSDT. Well, let's get some. Well, fuck. Nothing any US trader can get on. I do miss being able to trade on BitGet. That's a good exchange. Okay, well, let's look at it over here since he's asking for it. ALU, Altura to the tether. Well, that's not complicated. What would be the confusing part there? Bring it in, right? Just okay. Why would you not take that? Anywhere in there, what's the first thing you're going to do, right? If I up here. Clear target, clear exit. That'll be first, right? Here's your third. If you're going to get a 1, 2, 3. Very low risk, right? So let it come down, right? We're not quite there. Let it get into that pocket. Do we have anything in there? We have an fair value gap. We have one right here. Right here. That market does not need to come down here. You can do it right here. You'd look for it to tap into that just a hair, right? If we get right to the 50, right? If it doesn't break the center line of it, the 50% of it, that's all the better. You'd have a corner pocket. Now let's look at that subdivision here. Actually, looks like you get a little diag in there. That may be too soon, right? You're coming. Oh, that's a pain in the ass. You got to go 1, 2, 1, 2. This actually gives you get a new high here. So looks like that's just a liquidity grab, right? To bend over breakout traders. It's their favorite position. Okay, so they're in a panic. This could be A, B, C. It looks like you've got an impulse coming down here. I wouldn't trade the size here yet. I'd want to see that bounce. It's a little unsure. You're a little unsure here. Is this A, B, C? Right? You've got this wick here. You can make a case that there's a little diag in there. 1, 2, 3, 4. God, can you do it? I think you can. 1, 2, 3, 4, 5. Oh, that's a leading, right? It's not really where you want to find that. Let's see where we loved it here. Oh, shit, you're going to 15. Can you finish that thing? 1, 2, 3, 4, 5. Yeah. So this seems like this was just liquidity grab, right? Somebody got fucked there. Looks like you can finish it here. So you might do A, B, C. A, expand the B down for the C, right? To come in here. I'd be mindful of, okay, let it come down. Okay, break something. Show me, right? Instead of, okay, is that it? Nope. Is that it? No. Is that it? Nope. Oh, there. Right, these, right, the kill more counts than anything else, period. Right, they're trying to pick the turn. Okay, let me keep moving off of that. And okay, I think this got fucked up somehow. All right, I'm gonna fix it. Okay, all right, how we doing? So that's ALU. Quim, hello, mate. I'm just sharing with an idea for Palantir for you to review. Okay, let's take a look. Okay, let's see. Are you guys getting the same thing? Could you take a look at the bloodbath of ZRC, crypto Myro chart? Okay, guys, give me a second. I gotta, if you want to do it, right, of course, all you have to do is join our Discord, and you can make a request, as opposed to doing it in the live stream. Half the reasons it's hard for me to get to them all. Okay, are we on the right one? Why what the fuck? What am I doing here? Let's copy this. Save, and that means I got to share this tab instead. Okay, so here I'm going to just do this here, just so we don't get the overnight. All right, Palantir. Whew, that's gorgeous. This is actually, right, this is for when I was first taught, this is how a golden zone was described to me. All right, I just embellished. 38 to the 618, right? That was always the golden zone. So I like what you're doing here. That's likely traditional education there. What's not to like here? This is beautiful. Okay, so I got an ABC coming with a nice finish. Can we get that to done? Yeah, I might do that as a WXY, right? Just, I mean, for the, Elliott purist, because that looks like an impulse. That's your correction. That's another impulse. Oh, fuck, I don't know, this shit doesn't matter. Okay, let's see where we are. May already have this in the pocket. We got a big gap here on the 1 hour, and earnings on the horizon early May, when we got it. Well, I guess mid-May. What did I say? Oh, May 6th. Oh, that's coming up. Okay, so you're making earnings play. Geez, what's not to like there? Nothing. I like all of it. Nice use here. 1, 2, 3, 1, 6, 1, 8. Right, it's very nice. I like your style here. Very nicely done. Who is this? Quim. I haven't seen you do it like this before. Very nicely done. Good finish here. Let's push up here. 1, 2, 3, 4. 1, 2, 3, 4, 5. What? Well, does it look like it's done, right? In our right, kind of a theme for the day, right? Do we have a 3? Nope. Which is always the idea, is that it's the first, see, that's what creates the B, right? The impatient trader. And there are times when you'll see this, but the first people that take this, that's what creates the B. Oh, you know, they're early because they're not looking for this, right? They just think, oh, it's going to move in straight lines, which that's not how the market moves. It rarely does that. Right? More likely to do this. Well, so think about that from the algo perspective, right? Which is, you're not trading against people, guys. You're just trading against machines. Okay, so what does the algo need to do here? You're trading, right? We got a fair value gap here. So you can see how whenever we get the pivot here, maybe we haven't, I don't know, we swept a low there, right? So that can be the good start of it. It's going to come back here and rebalance that, because that's all it's ever doing, right? It's either I give ICT credit for this, right? Identifying the algo's characteristics. It's either sweeping liquidity at a pivot or it's rebalancing something. That's all it does. But it does it in this shape, right? So we get the measured move algo in conjunction with, oh God, what does he call it? The interbank price discovery algo, right? It's just, he doesn't know. He just made that up. Okay, all right. So, but you can see how that would, okay, right? This is, right? You add that. Now you put the fair value gap back in there. You see how that would, so I got 2 algos here working, right? I got the measured move algo, and then I'd have the IB, whatever the fuck he calls it, the interbank algo. Both of them at work there. And if I'll call it a contemporary golden zone. So do you see how that fits together? Now, we may not get this, but we're up here. Here's one algo, rebalance, kicking the short algo here down to target where it runs into the golden zone. That's the trade you want, right? Because you've got this. Now, are you going to get here? When we get here, right? Are we going to get a 3, right? Well, there's got to be, you know, enough buy velocity there to break that, to get out of this, right? To get out of this series of 3s. 1, 2, now I got a 3, right? So that's how we can identify where we are in the count. Oh, I got a 3. Actually, for a 3, you'd be looking for it. If we're going to do what it usually does, 1, 2, 3. What else would I have here? Golden corner. We're going to get it here. Maybe it's going to get it sooner. Right now, 1, 2. All right, now that's going to subdivide as well. There's the trade right there. That's what I would tee up, right? Now, do I know we're going to get this? Of course not. But if I get this and then I get that, right, then I'm looking good. Okay, Palantir, that's nice. Quim, some of the best work I've seen you post. You've been studying at night. Very well done. Plus, I like the style that you're using here. Very, very nicely done. Okay, so I got, how do I say this one? Robang. I had it up here. I got to find it. Oh, shit. Okay, so I'm going to go over here, which means I got to share this tab instead. How are we doing? Did that work? Yeah, it did. Okay, so a lot of people have been asking about this, right? So this, and I double checked with my Elliott wizards on this. 1, 2, 1, 2, about all you, right? You can't go 1, 2, 3 here, right? Because if you were thinking, oh, it's a diag, no, can't, doesn't fly. But I can get one here. So 1, 2, 1, 2 does seem to fly. Oh, I got a lot of stuff on there. Let me get this off just for a second. We can leave that on. Okay, 1, 2, 1, 2, 3, 4, 5, down for a 50. How does it get to 50? Just another 3. Oh, this is some inside baseball, right, as to what's going on with HBAR, why that's cranking, but I don't know. No, we need to get into all that. But what's the count? What's the implied count? Well, I got a pretty nice, this may not work for a set of median lines because it's so sharp, right? We've already blown through. So it doesn't, that's the wrong tool for that job. But oh, come here. This seems to be, I'd probably do it this way. Let's make sure I don't have my invited guest coming on. He comes on at 1. Okay, so 1, 2, ABC. So the Elliott oscillator hasn't caught up yet. Interesting. That's because that's so abrupt. Okay, if we're going for a 3, well, okay, there's one of those times where I mean, that's a big blowout here. So, okay, well, let's just market structure for a second. Oh, here, I'll just use this. So right here, what do we have? Break of structure up, right? So after a break of structure, right? So just like this, just like this. Okay, let's do them one at a time, right? So you kind of get the point here. Let's just do them right, because this is kind of critical to the whole thing. Okay, so let's see if we can make some sense here. Right now, this is I don't want to make light of this. I don't want to just fucking higher. This is absolutely critical, right? You have to understand this. What happens here? We can do the same thing over here. Look at every one of these. Oh, here we'll just do it that way. Well, so okay, what happens here, right? So HBAR, right? Oh, it wouldn't be in crypto, would it? What happens after every one of these pivots is broken? Here's the first one, break. Oh, let's do it this way. Break, retrace. Break, retrace. Break. Well, you could use the same one. Retrace, right? Break, retrace. Break, retrace. Now, we just broke again. What are we anticipating? Now, we don't know where that's going, right? It's, if you're not in it, that's not that you absolutely do not want to buy that. Well, I shouldn't say that. I would never buy that. Let me rephrase that, right? You don't want to buy that at the high, at the breakout of the high, and just for that very reason. What are we into now? I don't know how far that goes. For all I know, that's going all the way to the 3rd in a straight line. Nobody knows where that's going. But what can we anticipate based on what the market does? Let's 90% of the time, 95% of the time, after a break of structure. Now this can go right, but after a break of structure, retrace. Now, why does it do that? Well, number one, you know there were stops up here, right, for the short sellers, right? So they've grabbed those stops. Now, remember, right? If we allow for the premise that the algo is doing one of two things, it's either grabbing liquidity at pivots or it's rebalancing something. Where is it going to get more liquidity? Right, which is what it needs to keep going. It needs fuel. Well, we're going to have to go to something smaller here, right? Or it's going to have to create something on its own, right? So let's go in here. So what's it doing right now? So the first thing it did, we can look at this and we can objectively look at it and say, what happened here, right? Break of structure, right? So the search for liquidity is achieved here, right? We got some. Oh, a nice big drink here. Now what's happening? Retrace. What are we doing on the retrace? We're rebalancing the fair value gaps, the imbalances, right? There was no opportunity for a seller in here, right? It's imbalanced. Right, so the market's coming back down to balance it, right? So there's unfilled orders, latecomers to the party. Now, is that the one you want? Right now, this is going to be my theme for the day. Is that the one you want? Oh, we're expecting this. The market can do whatever the fuck it wants to do, right? It's just that's not what it usually does. Why do we want to trade Abby normal? We don't. We want to trade normal. That's what it usually does. And oh, lo and behold, we got our 3. So if it's going to rebalance, now shit, I mean, it could rebalance. It could rebalance and sweep the low and shit, it rebalanced and it grabbed liquidity down here. But that's not what you would anticipate here, given the strength of that move. Of course it could drop through the floor. But what we've got here in front of us, was that what you would anticipate? It looks like we're on our way to a 3. Now, again, you never know, right? This is a snapshot in time. Could this be the one of the 3? Seems likely. Let me, I like this one price line where I can see it. Oh, price line. It's an octopus or something here. I am the octopus, this guy here. Oh, fuck. That's not what I wanted. Get off of there. I want to put it. Oh, shit. Where'd you go? Right here. There we go. All right, so we can see it. Rebalancing. Now, it doesn't look like that's quite done there. It's just too fast. We're up and we're down and we're going to go up maybe, but that's not what I would anticipate. I'm looking for a 3 here. I don't have it. Okay, so 1, 2, 3. Shit, can I go? If I go to 60, do I have an impulse in there? I mean, it's so abrupt. It's just a rip right in your face. Just okay. Well, all right. What are we going to do with it? If I'm thinking 1, 2. Might come here just to check it. Rebalance at the 50, right? So that's the intersection of two algorithms right there, right? The measured move algo and the what was it called? IBP DT, some fuck, the ICT algo, right? Let's just call it that, the interbank algo. So I have the intersection of two of them right there. Does that mean we're rallying? Well, if you were an Elliottician counting that, what would your thought be? That looks like 3. That's not so. Oh, shit. Can you even get it? Maybe you got a diag there. So let's label it. Right, it's kind of the implied count. 1, 2. So this looks like 1, 2 again. 3, 4. You're looking for this. I mean, that's a 60-minute. 1, 2, 3, 4, 5. Looks like that's A, right? It looks like all we're doing is just, okay, well, we got to correct it. Didn't get a new high here. That's a fuck you wick. 1, 2, 3, 4. That looks very 4-like. So it looks like this is an A going in. Now, all right, so I can see up here if it's going to rebalance. All right, so you can see like what is the algo going to see? It's going to see a big imbalance here. What is the Elliottician going to see? 1, 2, 3, 4, 5. What are we anticipating? Right, nice, maybe a zigzag here. 3, 3, 5 to a golden zone. This is the wrong time to buy it. Well, I shouldn't say that, right? You could trade the B. You could trade the B. You're looking for a little zigzag in the B. 1, 2, 3, 4, 5. If you're if you're just uber bullish on HBAR and you want to trade this, well, there it is, right? It's just another 3. It's all the market can do ever. This is what I mean by the intersection of two algos. Rebalancing, right? That fair value gap, and there's the measured move algo working from a pivot to a 50. For the long-term play, if you're a short-term swing trader, trade the B. But don't have it. I would caution you to be anticipating new highs. That's not what it usually does. Not that it can't do it. It's just not what it usually does. For a long-term play, okay, give me if this is an ABC, well, that's kind of deep for a 4, but the 3 is so huge. I mean, 1, 2, 3, that's way beyond 2, 6, 1, 8. So we've got, the other possibilities, it turns into 1, 2, there's a 3, 4, 5 in here, and we go deeper, and you're going to do something like this. Not dramatically different. So my view is this is intriguing, enticing, interesting, but not ripe, right? It's a green banana. On my watch list, I'd have it high on the watch list. Right? I want to watch this, but I'm not buying it until I see my 3 down here. All right, good stuff there. It's Robang, got HBAR. Let's see, how am I doing on time? 12:30. Okay, we're good. Woo Wonka, thanks for a post here from the Wooster. I gotta do it over here. Oh, Jesus, look at the market turn around. Unbelievable. Okay, so I gotta leave there. Does that work? Do you guys see it? Could you take a look at what? Okay. So that's, I got to do this, save, and then I got to share this tab instead. All right. Hodl. Wonka always adds a little creativity here. Okay, so I got an RSI, a MACD, and an Elliott oscillator. That's a nice trio. momentum indicators. Ooh, that's ugly. Well, it looks like you're making the full round trip here, doesn't it? I mean, what else is there to say? I don't think there's anything to add there. I mean, his work is perfect, right? So 1, 2, 3, triangle 4, 1, 2, 3, triangle 4. That's what it would appear, right? We don't have this quite done. A, B, C, D. That's always easy, or excuse me, always kind of hard to conclude you have a triangle. It certainly looks like that's what we're doing here, unless because this would be A, B, or 1, 2, maybe. This would be pretty sharp for the 4 to be here, right? So it's much like we've been looking at some other things, right? Where it's like, oh, is that enough time? It's not quite enough time, right? You put it over here and I've got better time. I got better balance here. So if I'm coming down here, okay, well, we know what to look for. Let's do it this way, right? We want it to come down here and then something's got to come back here and break something, right? So this would be the one I'd like to see it break, that one. All right, maybe there's imbalances, fair value gaps here, and you're after that. I'd be looking for this one. I would just mark this as I want to see that chain. I want to see that break. So I know, right, all that does, right, it doesn't tell me anything other than I have a hard pivot here. I have a good pivot. We'd be breaking the low. So you can kind of see how, okay, well, remember, right, algo, what's it doing? It's either rebalancing or seeking to find liquidity at a pivot. Well, there's a big juicy pile of liquidity right down there. Right? Everybody on the planet knows that. No mystery about where the liquidity is. No mystery about if they're going to go get it. Now, you know, sometimes they fuck with you, right? They'll go just right to it, or they'll sweep this one. I'd expect that to get swept. It completes the count, right? But what it does is kind of it completes the count. Now, if it stays above the pivot, then you could still go 1, 2. If it breaks it, well, then you're starting all over. If we break here, can't go 1, 2, right? That's the one rule you can't break, right? Two can't go beyond the start of the 1. Maybe there's more history. I don't know that if that's the full history. Not sure on that. That's the trade you want. It almost doesn't matter if it breaks here. It's still that you'd want there. Everybody pointing lower. I would say it this way. I wouldn't be a buyer. Not here. Down here, you know, and so you can see, you know, this will be another liquidity. That would be another spot where they can grab liquidity, grab a drink. Wouldn't it be very nice if they swept here and we didn't sweep the low? Don't ever assume, right? It's very easy just to assume, oh, of course they're going to get it. Of course they're going to sweep it. Assumptions get you in trouble. Okay, let me keep moving. Morrow. Copy link. Let's see what we got here. 1232. Looks like we're okay there. Yeah, let's leave this. Shit. Whoops. Sorry, guys. Oh, sorry. I hit the mute and I forgot to get it back. Okay. Glad I caught that. Add what the, whoa, shit. And oh, I don't know what that last one is. Somebody's shouting. Well, so you can look here and say, well, why not 3? Why not 1, 2, 3? I mean, that's the first question you have to ask yourself. Why not the 3? Well, we know we're not to the 1618 yet, right? But we're not quite. We just got to the 1272. That's bold, right? I mean, it's a high class problem. If we're going to go 3, 4, 5, if this is, it has. It sure has a little nice look to it as a 4. Well, you would have to just have this kept as an alternate, right? You'd have to have it somewhere. So you just keep 2 counts. Oh, where's your, holy shit, where's your 3? Did you even put a 3 in here? It looks like maybe you drew those, or you did use text here. So as the alternate, 1, 2, 3, 4, 5. All right, I guess it would be over here. Let's go this way. Put it in blue here. So that's a reasonable alternate. 1, 2, 3. I know, right? For a bull, you're like, oh, I don't want that to be the 3. But that's a good looking 4, right? So it's again, high class problem. Well, if it's 2 and you're the only thing that would really change is what you're projecting for the next move, or for the next swing, right? If you think it's 1, 2, so what you're basically saying is that you're going to have a very shallow. If that's going to be it, you're going to have a very shallow 2 here, 1, 2. Now we don't know, right? That could roll over and maybe going to get a deeper 2 here. I would just be mindful that you've got, I mean, a very real alternative right there. Again, right look. Do we have the right look? If this is the 4 and we're going to go 5, pretty good. Pretty good, right? So I would just be mindful of that. So again, if you're a buyer here off of the idea that it's going to be a very shallow 2, so we're going to have an abnormal 2. We're only going to go 23 on the 2. That's the first thing that I choke on. Whoa, wait a minute. I don't want to trade abnormal. I want to trade normal. What does it normally do? Well, I got 1, 2, 3. Okay, it didn't go 1, 6, 1, 8, but I got a completed impulse. Now I'm going to assume an abnormal 2. When I've got what's characteristic of a 4, right? We don't progress the trend, right? We stall, right? So we have new value up here. Can we establish value? Okay, right? Can we seek value further, right? Or do we have to come back down, find some value below? I mean, again, high class problem, right? If that's going to go for a 3, what do you want to buy it right there? That's the next question, right? Is it time to buy it? Well, okay, here, just as I've drawn it, right? So if we just look at it this way, right? Do we want to buy in the premium? We want to buy it at retail? No, we want to buy it on discount. So can you wait, right? This is the number 2 killer for traders. Oh, I can't wait, man. Oh, it's going to go. I got to just buy it. I got to buy it. Shit, I should have waited. Right, buy it. It's so simple. Again, could a seventh grader follow that? Okay, here's what I want you to do, right? So I only want you to buy when we're in the discount, right? So if you wait, right? So is the 7th grader going to buy that? Nope. Right, you just told him, right? You're only buying it below the 50. We think we know better, right? Oh, no. I'm much more sophisticated than that. So I think this is a 4, right? This is going to be a very shallow 2 because I want it to. So really what you're saying is I want that to be the 2. That's what you're saying. It doesn't particularly look like a 2, but that's what I want it to be. Careful of that. And try and buy in at discount. If that's your range, buy it. Don't buy up here. Who buys up there? Retail traders. Okay. And then Mora. He wants an update on Mora. Marathon Digital. How are we doing on time? Okay, we got 20 minutes. Oh, I don't think that's mine. Oh, that's interesting. So when I use your, are you guys seeing that? Yeah, when I use that, I get your stuff. Did it right? I do. Oh, cool. No, that doesn't look right. Is it? Jesus Christ. Is that it looks like the exact same count, but you see, these are, okay, I guess we have that is Mara. Huh, interesting. It looks like exactly the same. Leading diag, 2, 1, 2, 3, 4. Well, this one, or a little more. Well, so, okay, this much better example. Well, actually, the contrast between the two is a good example, right? So why would you be thinking this is the one, right? Because it can't be a 3. Right, 1, 2. Right, 1, 2, 1. Right, we overlap the 1. The other one, we were just looking at different story, right? We had a completed impulse. We didn't overlap the 1, right? So that would be the clear difference between the two. I'd want to check this, right? It looks pretty technical. I'm sure we've done this a couple of times. Right, so it looks like we're in the pocket there. Shit I can't make up. All right, right to it. 4. Going to do it again. Right, almost the exact location, right? Just in the pocket between the two. 1, 2, 3, 4, 5. Very clean. ABC. Let's get you out of there. Okay, so far it looks like just playing great Elliott ball, right where you'd want to see that too, and you got all the ingredients, right? Everything you want to see. Okay, what's the algo going to do? It's going to sweep the lows there. Did it sweep the lows? Yep. What came off of it? That would add a little conviction. Let's dig in there. Well, let's get, just because efficiency. This is the one I like. All right, so if this is 3, 4, right, does it look like it's done? Right, again, it's, what are we looking for? Now, it could double here, or of course, you can have a triangle, right? But what you're more looking for is a 3. Do I have it? Just a toe into this big fair value gap. Wouldn't you anticipate, right? If you're trying, again, it's not you against the other traders, it's you against the machines. What's the machine going to do? Well, if it goes up here, it's sweeping the liquidity up here. A, B, maybe we get an expanded B. Now, of course it could go. I'm not saying it wouldn't. I'm just saying if you're trading probabilities, what does it usually do? Where's the 4 usually go? Assuming that's the 3, right? Which we can't really confirm just yet. Where do we usually go? All right, okay, it's a start. But wouldn't you like to see it come down here? Because then you'd have everything, all the ingredients here. Oh, I've got a 3. I'm right in the middle of a fair value gap, right at the 50%. That's where I would want to buy it, or here, right here. Why take undue risk, right? Why take the extra risk? I'll take that one if it stops me out. Oh, okay, well. Got to reconsider here, right? Is this getting blown up? Is this turning into an ABC? But I don't make myself vulnerable to get something bad happening. Oh, can they hurt me here? Well, that's a bee sting. Unless you do massive size, which I'm assuming you're not going to do. If it does this, does it completely fuck you? No. Oh, okay. Well, I got to rethink it then. If I come down here that hard, do I still think it's a 4? Next question. Why does it stop there? I didn't know that was there. I had a hunch. It's all the market does, right? It just gold is just out. Right? Again, it's not you against other traders anymore, right? It used to be, not anymore. It's you and the machines, right? What's the machine likely to do? Now, of course, we don't know. There's a few algos we can track, right? Let's use the ones we can track. Well, here's one we can see, right? It's not. What? How many times have I shown that? 50,000 times? I'd guess, yeah, 50,000. How many other things, right, can you show 50,000 times, right? Not many. Okay, let me keep moving. Oh, shit, that was your count. More, right? So waiting for the 4. Wait for the 4. How am I doing? We got 10 minutes. Good. Dr. Alban. Linear scale. Okay, let's see. Oh, he's giving me Bitcoin. Okay, let's see what he's thinking on Bitcoin. Dr. Alban, here's what I know. He's going to have the waves connected. Okay. Yep. Okay, let me copy that. Save, and then I got to share this tab instead. There's my reminder. My guest is joining. Okay, so I got Dr. Alban giving me Bitcoin perpetual. So I was trading futures. Oh, this is, yeah, I think you're on the right track. Well, okay, maybe, right? It's kind of it's not the greatest looking start here. You got to bear with me while I do this. I got to take these off. I mean, it does help me see what you're thinking. I get that. All right, we're looking for the, how are you trading this? Okay, so you're going 1, 2, 1. Yeah, this is, who knows up here, right? 3, right? Classic 4, right? We got a good looking 4. So this is pretty aggressive count. What did you give me? You gave me what did you give me? You gave me a 1 hour. Okay. Let's look at your 1 hour. Do we have an impulse here? That's the real question. Well, it looks like we might sneak it out. I don't know if I'm right on that. Let's get in there. That's a bummer. I know. That's just a huge, it's just a bummer with Elliott Wave. Okay, 1, 2, 3, 4, 5, maybe, right? I mean, you have to do it this way. 1, 2. That is good, right? You'd have to go down a little bit to see if that subdivision, can you accommodate that? See, I'd be more inclined to do this. Okay, let's just see if we can. It's not so much that I'm correcting. I'm just kind of thinking on the fly here. What's an alternate here? Looks like this looks like a zigzag to me, Dr. Alban. So, and this is, it could be being influenced by PK's count. All right, again, I'm never shy about admitting that I look for help from my wizards. Again, that's why I hired them, the best traders, best technicians I know. Okay, so 1, 2, right? So if this is a zigzag, right, which you could certainly count it as that. Here, impulse, correction, impulse, correction, which would. So I'm going to alter your count a little bit, right? So the thought would be, oh, it's a flat. All right, here's our A, B, or W, X, Y. We'll see how it finishes. So the 2 would be over here. And that's based on, we shall see, right? But as it sits right now, that this would be an alternate. Oh, let's see, this one's a little lighter. But we've got an A, B, C going in here. Right, so this would be A. Now let's flesh it out. A, B. Now we're looking for C down here. So come here. Let's go. What do I got there? That's AB, so I got to go up 1. Let's go to sub. Let's put it in blue here. A, B, and I'm going to change it here. Again, I'm not saying don't change your count. I'm just saying maybe add this one as an alternate, right? It's always good to have at least 2 counts if they're there, right? If there's enough to, that looks like that's a 5. So A, B, C. So that's the 2. It looks like we're starting on 3, 4, 5. Oh, let's go. Come here, Jesus. Okay. All right. So there's the 2 down here for the C. Just an alternate to consider, Dr. Alban. Okay. So we'd come here. Now I'm going to measure, right? I'm going to use my Elliott hat here to measure. You got to look at both, right? So with the algo doesn't care about your Elliott count, right? So it's dominant to dominant. Good. But I'd have both, right? I'd have this as well, because if this is 1 and this is going B, it's going to put, what the heck? I just lock up this shit. I think I did. Oh. That's not good. Something just happened. Oh, yeah, hang on. I got spinning. Something just locked up here. Hang on, guys. Oh, fuck me. Come on. There we good. Come on. Release. Oh, shit. Oh, there we go. All right, just locked up for a second. Okay, 1, 2, 3, 4, 5. Bring it down here. Well, that's what you don't want, particularly when I'm using new system here. Okay, all right, so just an alternate to consider. If your count, if this is 1, 2, we're kind of doing the same thing, right? The idea is, okay, let's see, is there anything in here that's needs to be rebalanced? Well, this has already been rebalanced. All right, so this all rebalanced. Below. Are you giving me? Oh, you're giving me Hyponacci? No, you're not. Looking for thought for a second. A, B, C. That's pretty good looking too, right there. 1, 2, 3, 4. That actually may not be done. 1, 2, 3, 4. Trying to get the 3, 4. C, 2, golden zone. We know Bitcoin loves the golden, but now again, right, it's tricky because we got to pull from 2 places. You got to pull from here. You got to do that as well. I would just keep them over here in your little, what do they call it? The fucking object tree. That's it. Object tree. If we come down here and we hold this, yeah, interested. Now, keep in mind, you've got liquidity, right? So what is it trying to do? All right, it's already filled this. It's already, I should bring that back here, right? This has already been mitigated, right? So this is a pivot down here. Likely there's stops there. Okay, let's see. There's 1252. Okay, so Mac Black stuff. Near, please. Gracias. Okay, man. All right, let me try and get near. USD. Let's no, go to Coinbase. All right, for all the poor US traders. I can't trade crypto. Near. Well, do we need to be in log scale? Yeah, I think we do. Pretty good 3 to finish it. It sure looks like a 4. A little bit, you're going to have to go with the implied, right? You're going to have to dig a 2 out here. Looks like 1 A, B, C of a 2. I don't love it, but somewhere in here, you're kind of stuck with a shitty 2. That looks like a 4, so you're going to have to get a 1, 2. Let's go to an 8 there. See if there's anything in the subdivision that might clear that up a little bit. Well, that's the deepest retracement you've got. So it looks like you're kind of stuck with that. A, B. Oh, fuck. W, X, Y. I think Gets a little gnarly in there. I would try and keep it simple, right? What can we see here? Right? So you got all the ingredients, right? Sweep the low, right? What is it doing? Grabbing liquidity, right? Breakout traders. It's going to zero. I'm sure of it. Phew. It's amazing, right? Fortunately, there's a new crop of them every day come to the market. I can't say I love this. Where are we here? This gets a little shit here. I'd probably get PK to help me with that. Oh, what do we got? Oh, what do you got there? I don't know what that is. Okay, let me just throw in here. Okay, let me just check something real quick. If I'm okay, hi Sam. Here is the link. Oh, okay. All right, so my guest is joining us here in a minute. Imbalance, right? So, well, when the Elliott is a little iffy here. I don't really. The impulse here is not great. So I'm going to start measuring. Okay, how are the retracements trading? It's decent. Oops. 1, 2. It's kind of ugly, Elliott. Despite there's a, I mean, we go one from $1 to $10. Can't say I love that count, right? So that would. This is kind of inherent in all of crypto now. We've had the big drop down, and then we're pushing off of it. It's shallow, right? If we're thinking 2, it's pretty shallow. I don't love this count. To tell you the truth. Let's see. You might, again, I'm just thinking on the fly here. You might have to rethink this along these lines. Some here, like somehow I need more time. I don't want to bore you guys on a live stream. It doesn't look right to connect it all, right? So if this were a 2, or now, well, I'd have to be down here. You kind of still have the same problem. That looks like a 4, but I don't know that I can get a 2 in there. I really can't. It would be like another 1, 2. Fuck. Can't say I love this one. I would wait for more info on this, and I'm just not sure of that count, right? It's too much chop in here. And then I don't get a clean. I don't really get anything clean anywhere. It's not good in either. So this one, just I would wait on this. I need more. It's got to reveal more to me. I mean, you've got this channel here that now has been broken. Right, the break of the channel is almost never is that a sell signal, right? It's just telling you. Or so when it break a channel like this, this is bait. Oh, that's got to be him. This is going to be bait to. Be right with you, Andre. This is going to be bait. How we doing? We got 3 minutes, right? This is likely bait for retail traders, right? The breakout trader. Be cautious of that. So there's the algo, right? Rebalancing as well. Again, where is it going to find more liquidity here? Probably stops here. Can't say I love that one, Mr. Black Stuff. I would be waiting. This is just the Elliott's too all over the place. One last thing here, and then we'll get over to Andre. EWO. See, you really got 2 3s here. Last thing, bear with me, Andre. I'll be right with you. Okay, and then we'll go 1070. See if we clear it up any here. Makes you put the 3 here. Well, let's just consider that for a second. Can I get a 1, 2, 3? No, I can't do that either. Already had the overlap here. See, now my view is here, unless you're in love with the backstory, you understand the nature of the business and why this is rallying. When the Elliott is off, I'll wait until I get something where I see I just don't recognize anything here I can lean into. Yes, I see this. Yes, the implied count. I don't like this. I don't like this. Is that the right look? Well, it's not the worst I've ever seen. But if you're just, again, trying to keep it drop dead simple, if this is the low and this is the high and I've completed something up here, well, I'm going to wait for the 50. I would wait on that one. I just don't see a trade there that's just, well, I wouldn't be buying it here. I mean, the best case here, you're going to get something that completes, and then you're going to be getting down here. That's what I see. That's a tricky one. It's just not playing good Elliott ball, right? So I might wait on that one. Okay, with that, I'm going to transition over here. We have a guest with us. So let me introduce you to Andre from Edgeful. Now, Andre reached out to me. You there?
Yep. Hello. How are you?
I'm good, man. Let's see.
Okay?
Yeah, I got to get, so there's a little bit of an experiment here. Let's see. So I don't have a screen for you. So do you have the option to share a screen?
Yeah, I do.
Yeah, when you do that, then I'll get mine off, and yours should come on. Well, that's you. You can say hi. So now you got a full frontal, right? So Andre reached out to me, I don't know, maybe a month or 6 weeks ago with a product that he had developed, and I took a look at it, and I just fell in love with it. And I just am trying to find the time to really work with it. And they've been so kind to continue to reach out to me and say, hey, I think we've got something your membership would really like.
Yeah.
So I figured the best way for this to be introduced to the community would let Andre do it.
Yeah.
Excuse me. So with that, I'm gonna turn it over to you and let you share your screen. And we got as much time as you need here.
Perfect. Can you guys see the screen okay? On my
side, I can't yet. I gotta see. Oh wait, sorry. So this will, all right. That'll put you in the corner. Yes. Now you're good.
Perfect. All right. Well, thank you for having me. First of all, I'll kind of give you guys a little bit about my background, then we can jump right into the tool itself. So my background is in finance and accounting. I was an analyst at a hedge fund in Boston called Weiss Asset Management. Then I was an analyst at Goldman Sachs for 2.5 years. I left Goldman and I started to trade. And when I started to trade and kind of learn like the more technical side of like the trading business, I came across the concept of the gap fill. It's very simple, very easy to see, very easy to measure. And I kind of like fell in love with it a little bit. And as I researched it more, I found that people kind of framed it as if this happens all the time, like 100% of the time, which obviously, as I'm sure everyone knows, nothing in trading happens 100% of the time. So given my analytical background, I go straight to Excel. I love Excel. I have certifications. I'm very, very comfortable with Excel. So I download a bunch of data, throw it into Excel. Now I can see, okay, gaps up, fill this often. Gaps down, fill this often. Very cool. I can see that. I apply it to my trading. Then I start to build more and more reports in this Excel file that eventually becomes this like monster that I could no longer manipulate anymore. It's just way too time intensive for me to even see if something has any merit to it. So I go online and look for a product that shows me how often do gaps fill, how often are certain weekdays red or green, what days have the most volume and range, etc. Can't find anything. So that's where I thought to myself, okay, there's an opportunity here to build a platform that shows traders the probabilities of certain things occurring. And that's the kind of like the story of Edgeful, how it was founded, why it was founded, and that's what I'm going to show you here. And if anyone has any questions at any time, you can just jump in, interrupt me. I can see the chat here, so I'm assuming I can just go based off that, right? Yes?
Say that again.
Sorry. If anyone has any questions, they can ask right in the chat, right?
Yeah. Oh, yeah. Yeah. Can you see the chat? If not, I can see it.
I can see the chat. Yeah.
Okay, good. Yeah, go right ahead.
Perfect. So I was just going to say, as I go through this, if anyone has any questions, I can see. Thank you. I can see the hello there. Oh, no, that was an older one. But just please interrupt me at any time. I will be happy to kind of answer any questions people have as I go through it. So That being said, I'm going to run you through kind of right now, top to bottom, how everything is laid out, so you have an understanding of how the platform works and how it's laid out. So right now we have stocks, we have Forex, and we have futures. This is our asset selector all the way up here. So you just switch from stocks to futures, for example, and now you're completely switched over to the futures section of the site. So I just switched back to stocks, and right here is your steering wheel for the entire site, right here, the nav bar. Right here, we have 3 different report types: the price action, volume, and indicator reports. So right now we're within price action. So when you click on the report dropdown, this shows you all of the reports that we have within the price action report type. Then we have every ticker you can imagine, every ETF right here, and that applies to futures, that applies to Forex as well. Then we have our date selector. So we have it defaulted to a trailing 1 year. All of these little buttons here are just shortcuts for trailing periods, but you can also select a custom time frame by selecting your start and end dates. If a report has any variant, you can see that right here in the form of these bubbles. So we have the gap fill report, which is what we're looking at now. You can see we have the standard one, we have by size, by weekday, by close, etc. Here we always have a visual representation of the results, always a table representation. We've recently added these explainer charts, so you can actually see without having to go to a chart what a gap is. So in this case, this is a gap up. Then here is a gap filled. Here is what a gap not filled looks like. We have some more explainer text if you're interested or if you're not really familiar with the concept of the report. Then we recently added trading view indicators. So what these do, we have one, we're building one for every report, but this will show you exactly on your chart what the gap is. As it's being filled, you can see how much of the gap has filled, etc. So all you have to do to request access to the trading view indicators is just click on this button right here. Then we just have a little bit more text about like, what does this report measure? How do I use this? How do I apply it to my trading? That's what you'll see here. And then finally, we have a video that runs through the whole thing that shows you how to read the report, what it's measuring, and a live chart example so you can actually just apply it directly to your trading. So that's how everything is laid out. This is pretty universal across all the reports. Now I'll show you guys a few reports that are our most popular. So here I'll just cover the gap fill report. This is one of my personal favorites. As I mentioned before, I'm very gap fill oriented. And so here we're just looking at SPY and we're looking at the trailing 1 year. What you can see is that in the last year, 62% of gaps up have filled and 59% of gaps down have filled. So what does this mean? I'll tell you an example for gaps up here. So just off the cuff, Monday closes at 100, Tuesday opens at 105. Price has to come down and touch the previous day's closing price, or 100, on Tuesday for that to be a gap filled. And if it doesn't touch 100 on Tuesday, that would be a gap not filled. So you can see that price touches the previous day's closing price just about 60% of the time. So this report can help you with a certain bias in terms of like what direction to trade in terms of like whether being bullish or bearish. Then what's very interesting is that when you look at this by size, so by gap size, so a smaller gap would be maybe a $1 gap and a larger gap would be maybe like a $4 gap. When you look at this by size, you can see that, I'll actually switch to dollars here. You can see that gaps less than $1 on SPY fill over 80% of the time for gaps up and 90% of the time for gaps down. So this is a very strong signal. When you see a smaller gap, you have a very, very strong certainty that it's going to fill. What's also very interesting is that as the gaps get larger, it's very unlikely that the gaps will fill. So when you see small gaps, you can expect a reversal. When you see larger gaps, you can expect continuation.
What's so cool is that the numbers back that up, right? So there's no guessing, right? It's so objectively oriented. That's what I just latched onto right away. It's almost like it's scientific.
Exactly. That's exactly right. So, and this is the beautiful part about the data is that we do our best to display everything in a manner that's very digestible, regardless of your level of experience with data. So we like to think that it's very simplified and very easy to see, or very easy to understand. And what's nice is that there is no opinion here. across the board, there is not a single opinion that gets put into this data. This is the factual data. This is what has happened historically. And if it benefits me, it doesn't matter. If it doesn't benefit me, it doesn't matter. So this is the just like the factual data, which is really nice because in the trading space, there's a lot of he said, she said, which is like not what you want when you're looking to like develop your edge. So just to continue here, looking at this by weekday is actually one of my favorite reports because when you look at the gaps down on Mondays in the last year, so when price opens below Friday's close, 95% of the time in the last year, on Mondays, price has come up to touch Friday's close. So Mondays have been extremely bullish in the last year on a gap down. So this is like, for me, very like shocker data to see. And this is something that I like to use on Mondays when there's a gap down, which doesn't happen every time, of course. But whenever price opens below Friday's close, there's a very strong bullish signal to find a long entry targeting Friday's closing price. And as I go through this, you'll kind of see what I mean by what I'm about to say, but I strongly believe that each weekday has its own personality. And this is all data backed, so I'll go into why. But we offer some of our reports by weekday, so you can actually see the different behaviors that kind of occur throughout the week. So you can see, obviously, Tuesday has a very different spread than I see a message coming in here. Does it work? Does it work for BTC? If yes, can you share the current ratios for the gap fills? We currently don't have crypto data. We're going to include it very soon. I'm actually curious if anyone wants to jump in here and answer this question.
You could do the futures though, could you not?
Yeah, that was what I was going to ask.
Right.
So
yeah,
do people trade BTC futures or ETH futures? I would love to know because I don't know of anyone that does, but if there are people here that do, then we can definitely add that in.
Very few. It's something to track technically, but very few because the margin is just so insane.
Perfect. Okay. I was just curious because we haven't gotten too many crypto requests. We do get some, but we haven't gotten too many enough to prioritize it. But if there are people that do trade crypto that can get value from this and we can quickly add the futures, that's something that we can definitely do. So just food for thought there. As I see these messages come up, I'll kind of pause and read them and see if that's something I can answer. But just to continue, you can see that each weekday has a different kind of personality, and it's Friday actually in either direction tends to fill that gap. So very important to just keep this in mind that each weekday is a different environment, provides different opportunity, and it's something to very much focus on when you're trading. Any questions on that? If not, I'll just move forward. Give it 5 or 10 seconds. Nothing so far. All right. So just to continue. Oh, I do see. Where are you getting the data? The WebSocket stream from Binance BNF. We actually have a bunch of different providers that we get the data from. I can definitely look into the WebSocket stream from Binance. We have not looked into too much on like the crypto providers, but I'm very familiar. I'm pretty sure that our current providers also supply crypto data, so we can definitely build that out. But even, I would love to know if you guys have a preference on where you look for data, because I know that like the Coinbase, like BTC from Coinbase is slightly different from BTC from Binance, etc. If you guys just want to like throw that in the chat as I go through this, that would be helpful.
It's usually based on where they're trading, right? So I mean, they're going to put it on TradingView based on the exchange.
Yeah, that's true.
Not all of them are on.
That's true. That's a good point. But yeah, I'm pretty sure that our current stock data providers will also provide crypto. So it's definitely something that we can get added in. It's just more so the interface that changes because crypto is 24-hour sessions. So like we need to consider that, et cetera. So it's not as simple as just like throwing it in. Oh, thank you for Mac for that. But yeah, there's just some more technical stuff in the back end that we need to figure out. But just to continue here, this report shows red and green and red days by weekday. So this allows you to see, does a certain weekday have a certain personality? And what you can see is that Mondays in the last year tend to be very bullish. So 65% of the Mondays in the last year have closed green. Again, that kind of reinforces what the previous report had said about gaps down filling, which in theory just means that price rises. Also, this means that price rises as well. So this is some more, where's the majority of volume and features leading in the market? I'm going to get to that. I'm going to get to more volume stuff in just a minute. So I'll answer that for sure. However, this report shows you, does a certain weekday tend to lean a certain way in terms of bullish or bearish? And you can see that Mondays are really the standout day for SPY, but the rest of the weekdays are kind of more 50-50, so it's not really as helpful, but Mondays are the standout day. So going into a certain day, just knowing if it has a tendency to close in a certain direction. Any questions on that? If not, I will continue. I don't think so. All right. Another one that I really like to use is the intraday range window report. So personally for me, I like to trade options and I trade them only within the first hour of the day. So this report allows you to select your start and end times, and it gives you the actual average range of the day. And by range, I just mean the high to the low. So you can see in the last year for SPY, the average range within the first hour is $2.20. So let me just switch to SPY here. And you can see that right now it's around 500 bucks. So a $2 move is what you're going to expect, which for options is a great move. It's a very nice return if you can capture like the majority of that move. But the way that you can use this report is to say, if I like to trade this first hour, what is my expected range? Where should I put my profit targets? I'm not going to expect a $3 or $4 move within the first hour if the average move is only $2.20. So this allows me to maximize my profits by having realistic profit targets. So I'm not overextending my profit targets, just crossing my fingers and hoping it gets there, when in reality, you only get $2.20 within that first hour. So if I know that I'm not going to be holding trades for multiple hours, this report will really help you understand, put my profit targets in this area because these are the most likely areas to be touched. You can also see this by weekday, and you can see that there's a very drastic difference in terms of like Mondays versus Thursdays, for example. This is another one that I think is very interesting. It's the previous day's range report. So this shows for every time in the last year that we have taken out the previous day's high, we have closed green. SPY has closed green 77% of the time. For every time we have broken the previous day's low, SPY has closed red 77% of the time. So what that means is the previous day's high and low are very strong levels that will indicate whether today will close red or green. And that break is by any wick, like a wick, a close, it doesn't matter. If it touches the previous day's high, that means that over the last year, 77% of the time, those days have closed green. So just something to keep in mind, the previous day's range is those are very important levels, the previous day's high and the previous day's low. They can be very strong indicators to tell you how we're going to close on the day. We also have this by weekday, of course. So you can see as the data changes, or as the weekdays go on, the data changes slightly. But overall, this is something that I like to use now. This report actually, kind of side note, was requested. So you can see up here, we have a new report ideas button. And what we do is we build out custom reports completely for free. So if there's something that you like to look at, this is where you can request a report where you can say, tell me every time that we've bounced off the previous week's low and how often have we retraced back to the high, etc. Stuff like that. I just made that up.
You did the initial balance for me because I requested that.
I was just about to get to that.
Yeah.
And then the initial balance, I'll actually just get to that right now, right here. So the initial balance, I'm sure some of you may know, is the high and the low, the range of the first hour of trading. So from 9:30 to 10:30 Eastern time. So I'll actually show you on a chart what that looks like. Let me just remove this and then I will show you. So I was mentioning the indicators that we have right here are some of the indicators, which I'll show you right now. And this is the ARB report, so the opening range break. But all of our indicators, we allow you to customize the inputs. So in this case, I'm just going to change it from 9:30, from the first 15 minutes to the first hour. And then now you can see, if I go to the like a 5-minute chart, you can see that this is auto-selected the first hour of trading. So the high is indicated by this green line and the low is indicated by this red line of the first hour. Same thing, and it just gets plotted automatically, so you don't need to worry about, am I doing this correctly, or did I put it in the right spot or anything? It just happens automatically. So that would be a trading view indicator for this initial balance report. However, the initial balance is, as you can see from this little graph here, is just the high and the low of the first hour. And what this report measures is how often do we break one side of the initial balance after it's formed? How often do we break both sides of the initial balance after it's formed? And how often do we break neither side? So how you can use this is to understand that once we break one side, the single break, which is the most frequent, it's not very likely that we're also going to break that other side. So once one of them is broken, it's 40% of the time, 38% of the time, so not nothing, but you don't really want to bank on that other side breaking. So you don't want to put profit targets. Let's say we break the high. You don't want to set your profit targets at the low because it's unlikely to happen. Another thing is, after it's formed, it's extremely unlikely that we will not break, we will stay consolidating between that range. So hypothetically, in this case, that would be something like this. That would be if we did this for the entire rest of the day. This has happened 1% of the time in the last year, not something you want to bank on. And here's actually a great example. We broke the low and we're probably, it looks like we're not going to get back to the high here. So that would fall into this day right here. So
I see algos are very keyed to it as well. Hugely keyed to it.
Yeah.
I would tell you it's more important than VWAP. The IB, right? Because it's when we're outside of the IB, we draw in the higher time frame traders, right, with potential for a trending day. When we're in the IB, they're not interested.
Yeah. And this is something that after you actually brought it up to me, this is something that I like to look at too now, because I wasn't familiar with it before, but after you had mentioned it, it's definitely something that I find very interesting. So just to move on to the by extension version of the report. So I'll actually just switch to dollars here so it's easier to understand. But this shows, these smaller ones are the ones you want to look at. These are the average moves after we break either the high or the low. So you can see after we break to the upside, let me just make this a little smaller. So after we break out the top side of this, let me just move this over here a little bit. After we break out to the top side of here, you can expect a $1.45 range. So your profit targets can be, on average, should be, within this area here, because historically it'll get up to here and then come back down to break it. So
is that 100% or 50% of the IB?
Sorry, what do you mean?
Is that extension above? Is that 100% of the? Are you measuring 1-to-1 there?
So what we're doing is, the way that we actually calculate it is we measure after it's broken. We measure after it comes back down. So I'll actually just provide an example here. So let's say it goes up to here, and let's say it comes back down. We look at, after it's broken, we look at when it comes back down, and we take the high before, like between this.
Oh, I see.
Area.
Okay.
So then here, this allows you to understand, okay, the average move, and this is the average. So this considers if it wicks above and for the times that it really goes.
Okay.
And what you can see is that 145 is really that sweet spot. And then the same thing we have for the downside right here, which is a $1.70 move down. So in this case, right here, a $1.70 move down. So today there was a larger sell-off that extended further. I mean, but in this case, it was actually a pretty good trade because it actually bounced pretty heavily, but not enough to take you out of trade. However, on average, you're going to see the moves within this range to the downside. So this is something you want to take the majority of your profits somewhere in this area. Then we also have the maxes right here for the max move up and the max move down. So these larger bars are the single highest occurrences in the last year. So the single highest occurrence was an $8 move, a continuation up. I'm not sure what specific day that was, but that was a continuation up of $8, which is probably an insane day. Maybe it was earnings, or I don't know. I honestly don't know. But this is not something that you want to bank on happening all the time, because obviously an $8 move on SPY is insane. Same thing to the downside, this $9 move down. This is probably last week or something. But again, we show the maxes just to kind of frame what you can expect to the outliers and then how you can see it on the averages. And then
you got a question in the chat.
Yep. Sorry, did you have a question?
Oh, I said you have a question in the chat. Somebody.
Oh, sure.
You might want to check.
Questions relating to gaps. What about situation?
So that first sentence, you could answer that scientifically, right? What is the data? Did the data support that?
Yeah. So I'm reading the question from Thomas. Gap by week date is not that useful. So let me just go back to it first.
Let's look at that, right? Let's see if is that opinion or is that does the data support that?
No, this is I definitely disagree with Thomas here, because
we don't have to agree or disagree. What does the data say? That's
exactly. I was going to say, because this is not my opinion here. Right. This is the factual data. So the weekdays are very different, and you can see that. So in the case of a Friday, you can see that it tends to fill the gap in either direction. So targeting that gap fill is actually a great level to target. Whereas maybe a gap down on a Thursday is not very helpful, because it's kind of more of a toss-up. It's kind of more 50-50, more split down the middle. So that one is actually not as helpful, because it is more 50-50. But a day like Monday, I mean, this is pretty irrefutable that there is a very strong directional bias on Mondays when price opens below Friday's close. So price is very bullish, or SPY in this case is very bullish on a gap down on a Monday. And this is what has happened. So this is not my opinion. This is not, again, like I said it before, it's not my opinion. I have no control over this. This is actually what has happened for SPY, and gaps down on Mondays have been very, very bullish. Does that answer the question so far?
Yeah, good.
Yeah. In certain weekdays, I mean, they're not very helpful. So in this case, like, even if you see data that's 50-50, the way that I like to interpret that is to say, did I have a bias that is against this 50-50 data? So did I think that Fridays tend to be green, like for the most part? So I'll actually just pull this up quick. Fridays actually are more 50-50, green and red. It's kind of a toss-up here. It's 53% green, 47% red in the last year. So a lot of people like to say, oh, Fridays are always green, or whatever else. And it's this, when you see data that's more down the middle, which is in this case, obviously the case, that's how you can say, you can correct your bias to be, okay, this is not something I can use as confluence to my trade. I cannot add this and support this in my trade idea, because it is more of a coin toss. So that's how I like to use the 50-50 data to say, to correct any biases that I previously had, if that makes sense. Does that make sense?
Perfect. Yeah, perfect.
And then just to continue on that question, what about situation if we have a couple gaps or by time frame? So we do not measure gaps multiple days out. So the gap either fills or does not fill that day. So in this case, right, so let's say this is Monday over here. Day one is Monday, day two is Tuesday. Price hovers above the previous day's close, closes on the day, and it never touches this line, previous day's closing price. That is a gap not filled, even if Wednesday comes down all the way over here and fills the gap from Monday. The reason that we only do it day over day is because it starts to get very confusing, where it's like, let's say there was a gap up on a Monday, and then that doesn't fill. Now there's another gap up on a Tuesday. Now, what's the probability that the one fills from today? What's the probability the one fills from yesterday? And it starts to get very confusing of like, which gap should I be trading now? So we boil it down in a way that's very actionable and very day over day, so you can actually target these levels on the day of and understand the data and what their probabilities are for that day that you're trading. So I hope that answers the question. There's also one more piece here. Also, if the gap was only wicked, how many times does it come back? And so, okay, great question. And by the way, if it does wick and it fills the gap, so if it just touches and then bounces, that still is a gap fill because it did touch the previous day's closing price. But we have the report by close. So this report shows you that for every gap, so in this case, we'll just look at the gap up example. For every time the price has come down to fill the gap, how is it closed on the day? So does it continue down, like in this case, or does it bounce? And you can see just about 60% of the time, price has bounced out and back up. So the way that you'd want to use this is to say, I don't want to put my profit targets all the way down here. I want to set my profit targets a little bit higher up just so I can lock in more profits before the expected bounce. If that makes sense. Any questions on that?
No, that's good.
Perfect. And then initial bounce. So I'm just going to go back to this and then I'll show the buy close. So, and then this is the last one that I'll show here for the initial bounce. So every session has a middle of the session. So I'll actually, in this case, I will show the middle of the session and I'll just mark it out quickly because we don't have the indicator for this yet. But this blue line here is the middle of the session so far. So this shows that we've closed above the middle of the session 60% of the time. So we've closed above this blue bar, this blue horizontal line 60% of the time. Below the middle of the session, only 40% of the time. Then within this, the green and red line, only 34% of the time. So you can expect price to close outside of that area. Then between the, so in this case, that would be perfect, Thomas. Fantastic. Between the IB high and the session high. So that would be, let me just flip this scale here. So that would be if we closed above this red line. So just between the high and this line, and then below the session low, let me just invert this back so I can show the proper example, would be actually as if we just closed in this area below this red line. So this kind of just helps you understand what the where we tend to close on the day. Now, here, I'll actually go to the volume reports now because I think that this is really where, this is actually the second report that I added to that Excel file, but I feel very strongly because of the data that price, each weekday has its own personality because of this. So this report measures the average volume and the average range by weekday. The average volume is indicated by the blue bars. The average range is indicated by this white line. You can see a very clear uptrend on SPY throughout the week. So as the week progresses, higher volume and higher range. So how do you use this? How do you use this in your trading? You can see that Monday has the lowest volume and the lowest range of any weekday. So what does that mean? Low volume means most likely choppy price action, not a lot of continuation, definitely a lot of fake outs, and price action is just very hard to trade. So that's when there's low volume, and when there's low range, there is literally less opportunity. There is less meat on the bone. When the range is small, there is less opportunity, which means you need to be much more precise with your entries and your exits to capture the majority of that smaller move to make money. Whereas later in the week, there is more volume, there is more range. So what does that mean? How does this apply to your trading here? Later in the week, when there's more volume, there's more continuation, price action is cleaner, it's easier to read, there is not a lot of fake outs, there's likely not a lot of choppy price action, and when the range is larger, there is more opportunity, there's more meat on the bone there. So you need to be less precise with your entries and your exits to capture, you only need to capture a small piece of a bigger move. So trading later in the week is actually easier because of the increased volume and increased range. So Mondays are days where you can bat for singles and bat for doubles, but you don't really want to go for home runs on these days because that it's just not the opportunity isn't there.
That's huge information. That's huge information to know, right? I mean, think about it, guys, right? I mean, just how valuable is that?
Yeah, it's actually impacted a lot of people. Now, I know that this report isn't very actionable in terms of a breakout of this level or breakout of that level or whatever. But to understand the days that have opportunities versus the days that don't, this can help you with your sizing. So for Monday, maybe you size down. Maybe you can pull in your profit targets a little bit because the moves aren't actually going to be larger. So your targets aren't going to get hit and you're probably going to get stopped out at some point. Whereas Thursdays and Fridays, even Wednesdays, maybe there's a lot more opportunity there. So those are the days where you can maybe use more size, or you can leave runners, or you can set your profit targets a bit further out, because those days actually provide more opportunity. So sorry, go ahead.
No, I was just going to say that's just such powerful information.
Yeah. The example that I like to use is to say, just to kind of like relate it to something that's very relatable to everyone, is in the summer, you wear a t-shirt and shorts and that works for you. It's hot, you want to be cool, and t-shirt and shorts works for you. And you're happy with that, and you keep wearing that same outfit, t-shirt and shorts, all the way into winter. Now winter comes around, you're still wearing their t-shirt and shorts, but that's not working for you now because it's freezing out. So now you're like, well, what's going on? This was working for me before, but it's not working for me now. Well, the environment changed. So you need to adapt to the environment. And you need to put on your jacket, you need to put on your jeans, you need to put on your sweatpants, whatever it is, to adapt to the environment. Same thing here throughout the week. Mondays are days for t-shirt and shorts, and you cannot wear t-shirts and shorts on Thursdays and Fridays. You need to wear a jacket and sweatpants on Thursdays and Fridays. It is a different environment, and we don't control the weather, and we don't control the markets. It's up to us to adapt to the markets as they change. So it's up to everyone to say, okay, there's less opportunity here, I need to adapt to that. There's more opportunity here, I need to capitalize on that. So that's the example I like to use, because you can like very much visualize what I'm talking about.
Good one.
Yeah. Thanks. There's only a couple more here that I'll show, and this is one of them, the ATR report. So it's important that I mention. Let me just remove this here, and then I'll remove that. But ATR is just a measure of how, I mean, very, very simplified. I'm not going to go into the calculations of it, but you can just think about it in terms of how much price moves from the high to the low on average, high to low of the day. We only look at it on the daily time frame. So you can see here, the current daily ATR is just, let's round to $6. So what this report shows is how often does price from the high to the low of the day exceed that $6, or how often does it stay below that $6? So 62% of the time in the last year, price is the high to the low of the day is less than ATR. So now this is your benchmark to say, I think price will stay below, the high to the low of the day will be less than $6, because 60% of the time, 62% of the time, it will stay within that range. So high to low will be $4, $4.50, $5, $5.50, but not over that $6 mark. Then only 38% of the time will it go to $6.50, $6.25, $7, $7.50, etc. And this updates every single day, just so you guys know. This updates every day, and we always use the ATR at the time. So the ATR 2 weeks ago or 3 months ago was different than what it is now, and we always compare the ATR to what it is at the time. So when markets are more volatile, the ATR will increase, and we always compare to the relevant market, and we never like leave a certain like $4 or $5 just standard. So this updates every day. So what's extremely interesting about this report is when you look at it by weekday, you can see that Mondays, I told you before, low volume, low range. Now you have a very high certainty, 80% of the time, that we're not going to exceed this ATR here. Sorry, I'm just going to scroll down. This ATR here. So 80% of the Mondays in the last year have stayed below the ATR. So that means that, again, you have very high confidence in a smaller range, in lower volume, and likely in a choppy environment on Mondays. So in this case, again, bat for singles, take what you can get on Mondays. The opportunity is likely not going to be there. And if you do like to channel trade, if you like to buy the lows and sell the highs and just kind of go back in this like channel, maybe Mondays are good for you. But I mean, I don't know anyone who has success in choppy markets.
Yeah, and maybe not zero DTEs on Monday.
For sure, no. I mean, we can go into options. I mean, I trade options. I can give you the whole spiel about options and when to trade them and when not to trade them. But definitely zero DTEs are absolutely not suited for Mondays.
Definitely.
I actually unless
you're selling them.
Exactly. So I actually started selling 0 DTE vertical spreads on Mondays because I have such a high certainty of a low volume, low range, low volatility. And now I know that within this $6 range, I can sell the strikes outside of that and then capture that premium.
Yeah.
And that the 0 DTEs on the Mondays are just, they decay violently. So unless you are like micro scalping, I don't even know, like it's very, very difficult to make money with 0 DTEs on a Monday.
If you're a buyer.
Correct. Sorry. If you're a buyer, if you're a seller, completely different story. It's actually much easier to make money on Mondays because you have such high certainty of garbage price action. Yeah. And just so everyone knows, when you sell vertical spreads, you just want price to stay either move away. So like, let's say you're selling a call spread. Here's a great example. Actually a great example. Let's say I'm selling the 508 right here, this line here. I'm selling the 508 vertical spread, not to get into an options lesson right now. It's very simple. All I want price to do is stay below, that's not a great line that I just put on there, is stay below this 508 level. If it stays below this 508 level all day, then what that means is over the course of the day, the premiums will die and I will have sold them for an amount before they died. So let's say I sell them for, let's say like an 80-cent credit per contract, then I can collect that and over time it will die. So you want it to go down and away or just consolidate away from this level. So
you won't even have to wait to the end of the day.
Oh yeah, not even close. So I mean, by 2 or 3 o'clock, like they're going to be cooked. But just for the sake of the explanation, so this is extremely well suited for Mondays because we know the volume is lower, we know the range is smaller. So when we have a certainty of a smaller range, right? So let me do this quick. Let me turn that extension off. So when we have a very high certainty in a small range, you can sell the strikes up here. You can sell the strikes up here, and then you can also sell the strikes down here, depending on your bias. So if you waited for, I mean, not to get into the details of like entries and exits, but you can sell the strikes outside of the expected range. And you know that the expected range is roughly $6. So what you can do is say from the open was roughly, let's just say for argument's sake, it was 506. Then you can expect like a certain range based on the open, and then you can sell the strikes outside of that. So I hope that makes sense. I'm not sure the education level of like how like familiar everyone is with options. I'm more than happy to talk more in depth about that too. But pretty much what you want.
Yeah, maybe we'll do a follow up and it will bring in some option trading and just show some examples. I want you to get to the really, really good news because you've shown how powerful this is. Hit them with what the cost is.
So we have
they're thinking, oh shit, there's gonna be thousands of dollars. Holy shit.
Yeah. So it's $35 a month and our annual plan is $27 a month. So you can make back the cost of this in one trade.
Literally one Monday.
Yeah. I mean, it's the P&L, like the profits of one trade, you can take care of the cost of this. And like kind of inside information, we are going to be raising prices soon. So just keep that in mind. Anyone who does sign up currently will be grandfathered into the like you'll stay at the $35 price before we raise it. So just keep that in mind. I mean, it's going to happen soon, but it's $35.
Well, you've been adding a lot to it, so you should, right?
Yeah.
Should justify, right? So you guys are putting the work, you're expanding the product. That's very reasonable. I'm sure it'll be very reasonable.
Yeah. No, for sure. And we want to make sure that it is very accessible to everyone, but we also want to make sure that it's not thought of as
junk, right?
Yeah, exactly. Because I mean, the product is what we focus on the most. We want to make sure that we're getting as many people as we can. No, I mean, yes, for the revenue, but like the true part of it is we want the feedback from the people. We want to hear what their pain points are. We want to build the reports for them. And then we want to make this product have a very wide scope to be able to cater to any type of trader. So right now we have certain reports that are all related to certain strategies and certain trading styles, but we have stuff for swing traders, for scalpers, for day traders, but like we also have stuff for like longer term, like more investing style. But we want to make sure that we're covering every trading style. We want to hear from different people. Like, I know that there's a million ways to be successful trading, and that I don't know what all those ways are. So I want to hear it directly from the people. And the way that we started this like intro pricing was so we can hear from the most amount of people and make the product kind of very robust, so it's applicable to everyone.
Yeah, good idea.
Yeah.
The users. Yeah. Well, this my hunch is you're gonna have a lot. But do you at 30? You probably don't have a trial at 35. It's so reasonably priced. Or do you have a?
Actually, we do have a 7-day free trial. Which
oh my God! How do you not trial?
Yeah. So I should have mentioned that before. We have a 7-day free trial, and it is completely risk-free. You can cancel. This is not going to be something where, oh, they're going to keep charging my card or whatever. Our processing is done through Stripe. So we don't have any control of the.
Yeah, we do the same thing.
It's done through Stripe, so you have no worries. It's like a 2-click cancellation, so you don't need to worry about it. But I'm very confident that once you actually go through it and understand, you're not going to want to cancel, because the return on this will be exponentially more than what you pay for it. And in trading, across the board, I think that you should leverage the resources around you, whether that's a trading journal, whether that's market data, whether that's a tool like Edgeful. Trading is a very difficult business to succeed in. And if you want to shorten the learning curve, if you want to start to like speed up your growth, if you really want to like maximize your potential, if you think you're going to do it yourself with a pen and paper and whatever, I mean, more power to you. But if you want to do this, if you want to have the data on your side, you want to be able to track your trades, you want to be able to like get a journal, which we don't have a journal, but I'm just saying I highly recommend finding a journal. And I'm not going to say any specific ones, but find a journal. And pay for it. I mean, it's just like we can't get everything for free, and there are some incredible resources that will help you with 100x return on your payment, just in terms of shortening your learning curve. And this business is infinitely scalable. So the same trade, the same strategies you have that make you $100 will make you $1,000 when your account is bigger. That will make you $10,000 when your account is even bigger than that. So you just have to, once you learn how to generate profits from the markets, it just scales beautifully, and resources is what will expedite that process.
Great, man. Well, fantastic job. Thanks so much for joining us. I will put a link below this. We're not doing any discounting here, or you use our link. Use that. We just want you to get access to the product so you have better results. So it's that, just so you know. But if you want to support the channel, blah blah blah, right? You could use our link.
Yeah.
Right. We're not getting rich on a $35 ship, but hey, I mean, it's a nice way to support our channel and support Andre and the Edgeful team. Yeah. They've done a lot, right? As I said, every week they're introducing something new. Yeah. So I've watched them really accelerate, which tells me that people are using it, getting good results. Yeah. And so we want to support them, right? So they can continue to expand the product. So thank you so much for coming in to join us. I really appreciate it.
No, thank you so much.
Okay.
So, if anyone has questions, the support, we have hello@edgeful.com is the email. You can find that on our website, edgeful.com. And that's it. Thank you so much for having me. I hope you have a fantastic day. And hopefully we can do another one of these, maybe a little more in-depth on the options stuff.
Yeah. Sounds good. Okay, guys. Y'all have a good afternoon. Thanks again, Andre. Talk to you guys later.